We've gotten first quarter data about what hedge funds and what family offices own in their portfolios. And there are a handful of well-known investors that I think it's worth watching each quarter and paying attention to what they're buying and what they're selling. One of those people is the man who was made famous in The Big Short, Michael Burry. He's a much more active trader than a lot of the people that I cover on this channel. But what he's buying and what he's selling, I think, is still really interesting to look at. And the big bet over the last quarter has been a bet on China. So I'm going to dig into exactly what he bought, the new additions to the portfolio, and some of the exits from the portfolio, at least over the last 3 months between the end of December and the end of March. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at the portfolio overall. Here you can see a nice graphic with the portfolio. The biggest holding is JD.com. Second was Alibaba, and then HCA Healthcare. Relatively diverse portfolio. A lot of times what I'm looking at with these hedge fund managers is much more concentrated portfolios where they're betting 15, 20, 30% of a portfolio on a single stock. But that's not what Burry is doing. He's making much broader bets, and you can see that China is a huge piece of that. This is a look at the changes in the portfolio. And in particular, these are the big buys for the quarter. You can see that some of the bigger positions up pretty significantly. JD.com up 80% in the quarter. Alibaba Group up 66.6%. And then new positions, Sprott Physical Gold, ticker PHYS, Cigna Group, and also BP. So let's go through some of the top ones because I think it's interesting to highlight exactly why some of these stocks look so attractive right now. Let's start with JD.com. This is a Chinese e-commerce company and trading at a pretty good valuation. Shares peaked at about $106 per share during the pandemic. Those are down to $34.51 right now. That's actually up pretty significantly from the low early in 2024. So we don't know exactly when Burry was buying shares, but it is very possible that he's already up somewhere around 50% on these shares. But some of the multiples are really what I think become attractive on a price to earnings basis. These are trailing numbers. Shares are trading for 15.7 times earnings. On an enterprise value to sales multiple, it's just 0.3. Now, if we look at forward multiples, you get a price to earnings multiple of 10.2. and an enterprise value to sales multiple of also 0.3. So potential that this is a value stock, and that's similar to what we're seeing with Alibaba as well. Alibaba is another Chinese company, and on a forward multiple perspective, we're getting similar valuation to JD.com, price earnings multiple on a forward basis, 10.7, and an enterprise value to sales multiple of 1.3. Shares are down from about $300 per share late in 2020 to just $88 per share. So those are the two biggest positions in the portfolio, and I think it's interesting that they're really value stocks. This is an investor, remember, that is looking for values, is not typically the kind of person who buys high growth stocks or disruptive companies. Even with some of the shorting that was done during the Big Short, it was finding a difference between the fundamental or intrinsic value of mortgages and the value that he saw at today's price, and then paying a lower price than that. That's, I think, exactly what we're seeing with stocks like JD.com and Alibaba. A couple of the other ones that caught my eye was Block Incorporated, another one that was down really sharply from the pandemic, hit a low earlier this year. And this is not a business that is fundamentally in trouble. It's just a matter of what's the appropriate price to pay for the stock. So he obviously saw a value there. And then moving into some of the more industrial and energy companies, Advanced Auto Parts and BP were a couple that I think were really notable. The other thing that I want to highlight is things that were sold in the quarter. So these were the stocks that he sold out of entirely during the first quarter of 2024. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. There are some pretty notable names here. MGM Resorts sold out of that completely. CVS he sold out of. Toast, Oracle, Booking Holding, Alphabet, and Warner Brothers Discovery. Even Amazon sold out of that position entirely. So really selling some big names and moving that money from those stocks that you probably know pretty well to some areas that are potentially very undervalued in the market. So one of the things that I think we need to ask is this the sort of trade that we should be following? do you want to be moving from American growth companies to Chinese value stocks? And I tend to lean towards no. And the reason for that is just simply that we don't know enough about what's going on in China's economy. And as retail investors, I think it's really hard to stay on top of that. What is true and what's not in China? There's a lot of policy changes that could happen. We have seen with Alibaba, you can have fundamental changes at the top of the company or the ownership structure of the company. The CEO can disappear for a while. China is a bit of a black box for US investors. And as a result, it's just an area that I generally try to stay away from. Given that Burry is so bullish, though, I thought it was very interesting that he was selling shares of MGM Resorts. MGM Resorts has a pretty significant position in Macau, which is a special region in China where gambling is allowed. Now, that region has really recovered over the last 12 to 15 months after China came out of their COVID restrictions, so people are going back to gamble more, and MGM has been one of the beneficiaries. But he obviously saw that there was not enough value left in the stock, despite the fact that revenue and earnings are starting to improve in that region. So I think an interesting dichotomy of what's going on there. Maybe didn't see quite the same value in MGM today as there is in some of these other stocks. The other thing you see with Burry's portfolio is that he turns things around really quickly, makes trades in really big numbers on a quarter-to-quarter basis. Now, hedge funds do not report what they're doing on a day-to-day basis to the SEC. What they're reporting is what their positions are at the end of each quarter. So we have no idea what's actually going on between those points in the quarter. We can basically just see the big, broad movements. And that's what I'm trying to look at here, is what sort of general trends is Burry looking at? And I think the two takeaways are that he's selling out of a lot of tech companies that were growth stocks. So just to go through some of those on the list, Toast, Oracle, Booking, Amazon, Alphabet, sold out of all of those stocks, which I could think you could argue have gotten relatively expensive. A lot of those trading for 25, 30, or even higher price to earnings multiples, and is now buying stocks that are price to earnings multiples more in that 10 to 15 range. He's just finding those opportunities in China. Is it appropriate to be paying half of the price to earnings multiple in China, given the uncertainty there, versus stocks in the US? That's probably a reasonable discount, I think, in the current market, given everything that we don't know about China, the potential slowdown in the economy there, and the fact that they're just simply not as focused on profitability and generating economic wealth in their companies as they are in growing their GDP. That's something that US companies generally focus on. We have not seen the same value creation for investors in China, especially over the last few years. What sticks out to you with the buys, with the sells that Burry made in the quarter? Leave your comments in the comments section below. Love to hear what you think about his portfolio. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.